Okay, so good morning everyone. So since we've already identified our zones on the weekly time frame and the daily time frame, we've identified our trend lines on the weekly time frame and the daily time frame. We've also identified our trend origin as well as our so we've also identified our trend origin as well as our market structure. Now the only thing left for us to do is for us to take a trade off of this market structure. So how are we going to take a trade off of this market structure? First things first, price is currently in a correctional phase. So we're expecting price to switch from a correctional phase to the impulsive phase. So what we're going to do is we'll go back to the points in price where price switches from a correctional phase to an impulsive phase and see if there are any common price patterns along those regions. The points where price switches from a correctional phase to an impulsive phase in a downtrend is what is our lower high. The point where price switches from a correctional phase to an impulsive phase is what we call our lower high. That is, price forms a lower high, and then from that lower high, a lower low is formed. So we'll identify all of our lower highs in our market structure, of which we have 3. And we'll then go down to a smaller time frame, to the 4 hours, or the 1 hour time frame, and see if we can spot. Okay, sorry. This is not supposed to be part of it. And see if we can spot any common patterns that appear during those periods. So we have 2 boxes, 2 blue boxes. And then this third blue box is where we'll be expecting, more or less, we'll be expecting our common price pattern. Okay, so now let's zoom in and go back. Okay, so what kind of pattern do we notice here? If you switch to line chart, you can very clearly see an end pattern. So at this point, you can see an end pattern that contains one bearish engulfing candlestick, the right leg being lower than the left leg. That's to make it clearer. This is the kind of end pattern that we have here. The right leg is lower than the left leg, clearly lower than the left leg, and it contains a bullish engulfing candlestick pattern. So zooming in on this point, what do we see? We can see that the pattern we have here is identical, not exactly identical, but exactly the same as what we have there. And what do I mean by that? We have an end pattern with the right leg being lower than the left leg, and the right leg specifically contains a bearish engulfing candlestick pattern. So we can see it here. We have an end pattern here with the right leg being lower than the left leg, and the right leg containing a bearish engulfing candlestick pattern. That's our first blue box, and our blue box represents the highest point price, which is before coming down for a lower impulsive move. That's to say, our lower high before our lower low. And then we have the same thing here again. Price forms an end pattern with the right leg being lower than the left leg, and the right leg also containing a bearish engulfing candlestick pattern. So we'll now go down to our recent price action here. So we'll go down to our recent price action here, and then we'll see, then we'll draw a pattern like this. And then we'll come here and we'll see. Hold on. Let's put okay. And if price forms an end pattern with the second leg being lower than the left leg, and the second leg containing a bearish then we sell. So the minute we see an M pattern like I've drawn here, with the right leg being lower than the left leg, and the right leg containing a bearish engulfing candlestick pattern, we sell. Let's delete this. So that's it for soft close analysis on BTCUSD.